Nvidia sparking a chip rally after topping first quarter expectations with revenue soaring 69%. The company also warning of an $8 billion revenue hit in the second quarter due to China export rules. CEO Jensen Huang says that the curbs weaken America's position.
China is one of the world's largest AI markets and a springboard to global success. With half of the world's AI researchers based there, the platform that wins China is positioned to lead globally. Today, however, the $50 billion China market is effectively closed to US industry. China's AI moves on with or without US chips.
Joining us now, we've got Antoine Chkaiban, who is the New Street Research Technology Infrastructure Analyst. Just want to start with your biggest takeaways from the results, especially considering what we just heard in the soundbite there from Jensen Huang.
Yes, hey Brad, hey Madison, thanks for having me. So yeah, of course, there's this 8 billion headwind in the second quarter. And despite that, you have Nvidia guiding data center revenues up modestly. So that's, a very significant guide up if you account for the headwind. And I think the key takeaway here is that there's a surge in inference demand. All these reasoning models that have been introduced over the course of the year, O3, O4, DeepSeek, that are capable of generating a lot of tokens to improve upon their answers. That's driving a lot of demand for compute, and that I think is the key takeaway from these earnings. Of course, that translates into a lot of demand for the latest generation, Blackwell. I think there were a lot of concerns around potentially production challenges there. I was in Asia last week. I got the opportunity to talk about the supply chain. And indeed, Nvidia faced a lot of challenges. It's a very challenging product to ramp. And now we have visibility into 1,000 of these racks being installed at their hyperscale customers every week. So that's kind of dismissing any concern around inventories building up at OEMs for Blackwell. So I would say those are the key takeaways from the print yesterday.
And I know you mentioned in your note that you sent over to us that you are still buyers of any weakness. What is your long-term bull case for Nvidia, especially given some of the concerns that we'll get to regarding some competition with China specifically?
Yes, so on the demand side of things, our view is that the token is the new transistor. That's our motto. So when you're able to innovate at a pace that allows you to lower the cost per token, that drives tremendous demand. And to go back to the reasoning models that I was talking about earlier, there's an opportunity to solve humanity's greatest challenges by putting AI at work, in data centers, in huge data centers that are going to comprise millions of XPUs in the next couple of years, putting those data centers at work to try and solve quantum physics, to try and help companies design products, to try and help governments, optimize their budgets. And I think, that's our long-term view for AI in general. Now, with regards to your question on competitive dynamics, so there's the China problem. There's more generally, the debate around whether hyperscalers are going to ramp in-house chips. I would say, Nvidia has a head start, clearly, because they have a very strong ecosystem. They have a very large installed base. People know how to use their GPUs. You have universities who are teaching their students with Nvidia GPUs and who have been doing so for 10 years, like in computer science departments. And so that's very hard, to break that kind of ecosystem strength. And then with regards to China, so yes, as Jensen mentioned yesterday, there is a huge market there. And if Nvidia doesn't address it, if the US platforms don't address it, well, China is, of course, ramping. We've heard about Huawei's Ascend chip, who is reportedly becoming competitive, excluding these ecosystem barriers, who is becoming, competitive on paper progressively. I mean, there's still a gap, but they're trying to catch up, and if you don't, maintain Nvidia's leadership thanks to its ecosystem, and you allow, that new ecosystem to emerge, well, yes, that's a lost opportunity for the US. So that's, Jensen's message yesterday as well.
Antoine, there's also this transition from Hopper to Blackwell, and really contributing. Blackwell did nearly 70% of data center compute revenue in the quarter. Given that transition from Hopper nearly complete here, I want to play a clip on just what they had to say about Hopper on the call.
The H20 export ban ended our Hopper data center business in China. We cannot reduce Hopper further to comply. As a result, we are taking a multi-billion-dollar write-off on inventory that cannot be sold or repurposed. We are exploring limited ways to compete, but Hopper is no longer an option.
Okay, and so they also said that they sold H20 with the approval of the previous administration. H20 been in the market for over a year, doesn't have a market outside of China. Is there a larger headwind that they should be considering or that investors still need to think through with regard to H20, given the geopolitical concerns that every company has had to acknowledge?
I don't think so, because if revenues would have been 8 billion higher in the second quarter if they had H20. So now China is almost out of Nvidia's numbers. So now, if anything, there's a potential tailwind, if Nvidia is able to again work around the new export controls and introduce a new Blackwell SKU that can ship to China again, and there's been, this game over the last few years. It's not the first time, that a product is banned. You had like A800 and you had H20. And so now anyway, Hopper is coming to an end. As you mentioned, 70% of data center compute, that's like 24 billion Blackwell says in the quarter. So Hopper and everything else is now less than 10 billion in Nvidia's numbers. So I would say now we're transitioning to Blackwell. Now China, we don't know exactly whether Nvidia is going to be able to address that market again. There's been some news flow, in recent days around the fact that they're working on something. Jensen confirmed that yesterday.
Yeah.
He said he had nothing to announce. But yes, there's clearly an opportunity if Nvidia is able to work around the new controls.
30 seconds left. We know that there's a Trump put in the bond market. Is there a Trump put in Nvidia's stock price?
I don't think so. I think the stock price is back to 2024 levels, and I mean we're 1 year later, we're still at 2024 levels. Nvidia can grow, revenues 15-20% growth beyond 2025. I think there's a lot of upside. If you put like a 35 times multiple on 2026 or 2027 earnings, you still have, like a target price in the $200 region. So there's a lot of upside.
Nvidia is sharing in the call the China impacts due to changes in export controls. For the second quarter, the chipmaker expecting a loss in H20 revenue of approximately $8 billion. But Jensen just saying at the conclusion of the call that while they are thinking about developing an alternative product to be able to sell into the Chinese market, they don't have anything that they wanted to announce today. To discuss more on what this all means for Nvidia, let's get to CFRA Research Senior Equity Analyst Angelo Zeno. Angelo, congrats! You made it through the call. So did we. So what do you make of Nvidia and particularly the China situation?
Yeah, I mean, I think overall you've got to be pretty optimistic where Nvidia is sitting right now. I mean, the guidance, I mean, the results in itself are perfectly fine, solid results. The guidance, when you kind of try to dissect it, I mean, you alluded to the $8 billion in lost revenue there from China, which essentially indicates that the non-China business is running well ahead of expectations, because most of us we're looking at about a $4 to $5 billion hit for the July quarter tied to China. So the fact that you're likely running a couple of billion ahead of expectations in China. As far as China itself is concerned, listen, I think what you're getting here now is almost a de-risking of China in the fact that, hey, listen, you would have been potentially 8 billion above the current run rate, but the fact of the matter is, you now don't necessarily need to worry about another leg down driven by China. And in fact, if we were to see some sort of good news, and we don't think Nvidia is going and Jensen is going to give up on China, so we would expect them to at some point find their way back into China. Once they do, that is a potential catalyst for the shares.
Angelo, I know you got a buy on this name, but when you're talking to your clients and they ask you, hey, what are the key risks I need to think about before committing capital to Nvidia? You tell them what, Angelo?
Yeah, I mean, there's a lot of risks that are still on the table. I mean, I'd say right now, there are still geopolitical risks that you still need to take into account, tariff-oriented risks. I mean, we do have a pending 232 semiconductor investigation that is going on at this point, where we expect to get some clarity on it here over the next couple of weeks or months. Once we get further information on that, there is going to be a tariff, right, on technology products out there, on the hardware side of things. Nvidia largely now is hardware oriented in nature. We think they're going to be able to obviously pass through a lot of those costs. But nonetheless, it is a potential headwind that's looming out there at some point in time. But still, we need to find out, get some clarity on that side of things. I'd say the other thing, when we look out here over the next couple of quarters or years, the trajectory of AI demand, I think was more of a concern maybe 2 months ago. But nonetheless, we're seeing a lot of supply growth in terms of extra compute capacity getting added into the market, not only from the hyperscalers, but from these tier 2, 3 providers, whether it be the CoreWeaves, the Stargates of the world. And if we would get to a point where that capacity, that supply growth exceeds the demand growth, that clearly becomes worrisome for the AI trade. But I don't think that's something you necessarily have to worry about here clearly over the next couple of quarters, especially given what Jensen just talked about in terms of the emergence of these reasoning models, what they're doing with AI agents and the demand that's providing for compute here.
So one of the questions I have is in terms of some of these other areas that you just were referring to, to counter Josh's question, what are some of the positive things that you're telling people who are calling you that you're seeing? You referred to some of those things, but what are the other growth areas? Like one of the things we were talking about earlier is the fact that, we're really not seeing anything on the robotics side just yet from a revenue perspective. I think there's some other opportunities out there. Any other things like that you're seeing that you think are positives?
Yeah, so I think when it comes to AI, you've got to walk before you can run, right? I mean, you look at 2023, 2024; those were kind of the years of Gen AI. You've now got this inflection here in 2025, which we think will spill into 2026, which is kind of this shift towards AI agents, more complex reasoning models. And I think 2027, 2028 will be the bigger opportunity and massive wave in terms of the physical AI world. So you'll probably see some signs of that obviously here over the next year or two. But the greater momentum we think is probably 3 to 5 years away in time. But nonetheless, there are clearly catalysts, towards the growth of compute out there. I'd say also think about sovereign AI more and more nowadays, especially after the Saudi Arabia deal that we just saw. I think you're going to see a lot more deal making here over the next couple of quarters, and I wouldn't necessarily, be surprised if you saw more Nvidia, in some of these deals that get announced out there in terms of being used as a bargaining chip. And that's clearly going to be a potential catalyst for a company like Nvidia and the broader AI ecosystem.
Angela, taking a step back here, the question and concerns, leaving China aside for a moment, the concerns were that Nvidia had seen peak revenue growth. There's nothing to change that thesis, right? The company at its peak saw 265% year-over-year revenue growth. Those days are gone. We're in double-digit territory now, and that double digit is only going to decelerate over time. Is that still the case? And if that's the case, what kind of growth can we expect from the stock going forward?
So it's a great question. I'd say, yes, you're going to see more deceleration, especially on a sequential basis. I think you only saw a sequential growth of about 10% this quarter or so. It's going to actually, you're looking closer to low single digit here for the July quarter on a sequential basis. Clearly the China issue is what they've got to digest here before I actually think you do start seeing a reacceleration later this year. But maybe to your point, in terms of the growth rates, yeah, I mean, I don't think anyone can expect anything along the lines of what we've seen here over the last 2 years. I think that's perfectly okay, because when you look at Nvidia's multiple today relative to what we've seen here in recent memory, it's nowhere near the levels that we've seen. I mean, it's trading about 24 times our calendar 26 estimate. So you kind of look at a mid-20s multiple, you look at that free cash flow generation, which now actually helps the thesis in terms of the multiple, whereas you might not be getting the growth, but you are getting the free cash flow generation, and you're going to see more of that being returned back to shareholders. But I think the combination of whether valuation is as well as that free cash flow generation, not to mention, they did reconfirm the fact that they are going to see, or they are looking to expand the margins here as we progress here through the second half of the calendar year. And I think that's a really important point, because there was maybe some concern out there that maybe they wouldn't be able to do that to the degree that they previously alluded to, and they will. And then maybe, in terms of the long-term trajectory, we think this is a company that should be able to grow the top line, at about a 15 to 20% basis on a consistent basis, as things start to level off. But it's going to be lumpy, right? I mean, there are going to be cycles here and there. I mean, Blackwell is going to be a huge cycle. The B300, Blackwell Ultra, maybe Rubin Ultra isn't going to be anywhere near what we saw with Blackwell. But then when we start looking towards 2027, we get really excited about Rubin Ultra because there is a change in architecture there. So I think it's going to be lumpy in terms of the growth rates out there. But I think you can pin a 15 to 20% growth rate at the very least. I think that's on the lower end side of things here over the next 3 to 5 years.
Angelo, always good to see you on the show. Thank you, sir.
All right, thanks for having me.
For more on the results, let's welcome in here the man to ask. That would be Cody Cree, Benchmark Company Managing Director, Senior Semiconductor Research Analyst. Cody, it is great to have you on the show. So Nvidia reports, Cody, at least the stock initially in the after hours will pop at about 2 or 3%. What do you make of these results, Cody?
Thanks for having me back. I thought it was a really strong quarter, all things considered. And I think that's really the caveat that we've got to deal with is that all things considered, given all the issues with China and all of the concerns about slowing of capital budgets, to see the company come in with an $8 billion loss for the Chinese revenue and still come within a marginal range of estimates, I think is a victory, and I think you're seeing it in the after hours.
And so how do we make sense, though, Cody, of the China business and what the company is saying about it going forward?
Well, I think unfortunately, we don't have clarity yet. We'll get more on the call, but I think that it's going to be a matter of what do they re-architect for China, and how do they manage to deal with Trump's tariffs and the overall AI regulations that are hamstringing the H20 revenue. So I think that Nvidia has done this in the past. They've dealt with it, regulations in the past, and they've overcome. I expect them to do the same again and to be back on track into China in the second half, and that to help drive their gross margins back into that mid 70% range. And I think that's one of the standouts this quarter is a mid 60% gross margin, much better than the mid 50% margin that I had expected, and hence the earnings beat on the bottom line, 81 cents versus 73, even considering the charge. Without the charge, it was 96 cents versus 73 cents straight. And so I think overall it was a very strong quarter.
So I'm curious, you talked about the China factor not being, perhaps as big of a concern because obviously it's people they've compensated for it. But what other pieces did you feel like is giving the street confidence based on the reaction that we're seeing? Are there specific elements within other parts of the business that you think really is giving people that confidence to keep the stock moving upward?
I think what you're seeing is just an overall broad adoption of Blackwell. They saw, what was it, data center revenue up 73%, up 10% sequential, and their overall revs up 69%. So obviously led by data center strength, and their Blackwell adoption continues to build momentum. And that really is going to be the key to their future earnings, is going to be the growth of Blackwell and whether or not that is carrying them into the future quarters.
Cody, what about in terms of market share that Nvidia has? And they of course just opened up their ecosystem. That was announced at Computex. Are we going to see how much of these sort of contract chip making is going to start to eat in, or is demand so great that there's enough to go around?
I think it was a brilliant stroke on Jensen's part to open the architecture, to include and embrace the guys like Marvell and AI Chip and others that are making these custom ASIC competitors, frankly, and to embrace them into the NVLink Fusion architecture just means that he gets revenue regardless of who the hyperscalers decide to use. If they do develop and utilize their own tailored solutions, which are optimized for their own tailored workloads, then so be it. Nvidia will benefit from selling them the nuts and bolts and the networking piece of their architecture. It may not sell as many GPUs, but it would not have gotten anything from Marvell's custom ASIC sales. Now they can carry into those custom ASIC revenue trends.
Yeah, I was just going to say, I mean, the other thing is they are bringing even more companies involved with this. I happened to have a brief chat last night with Cristiano Amon, who's the CEO of Qualcomm. They were celebrating their 40th anniversary, and they were talking about the fact that they're now getting into this piece as well. So you've got a lot of different players, and I agree with you. I think it was a very smart move. Clearly, we're not going to see the revenues from that for quite some time, but just them opening up their ecosystem a bit more. And they're doing this on the software side as well. They've really been working towards opening up some of their software ecosystem pieces as well. So I think the combination of those things does set them up nicely to deal with some of the obviously competition that's growing all around them.
I think you're exactly right. I think that the opening of the architecture is going to take some time to materialize, but efforts are already underway, and the hyperscalers are already working with NVIDIA's architecture, their CUDA platform, and the broad NVLink systems in their data centers today. And so it just frees them to continue and to benefit from the investment they've already made, and therefore they leverage the best of both worlds, both NVIDIA's GPUs and any tailored custom ASICs that work specifically for their workloads.
Hey, Cody, just to go back, if you can help us with a bit of housekeeping that we are trying to understand here, and you alluded to it earlier. The company reported 81 cents in diluted earnings per share. If you exclude the H20 charge and the taxes related to that, you get to 96 cents a share. When you were estimating earnings, which one were you comping against? Which number is the sort of more relevant number here?
We had 74 cents for the quarter. And so we were estimating gross margins where the bulk of that charge was taken to pressure down into the mid 50% range. Instead, it fell into the 60s. And so it held up much better than we thought. The charge ended up being smaller, 4.5 billion versus their communicated 5.5 billion estimate earlier. So some of that will be taken in future periods, I'm sure, but also some of that inventory has probably found a home. There's such strong demand for NVIDIA's processors, whether it's the Hopper generation or slimmed down H20 versions, that I'm sure that Jensen is finding room for that extra $1 billion of inventory that wasn't accounted for in this charge.
Yeah. Cody, thank you so much. Interesting stuff as we continue to digest these numbers. Appreciate it.
Thank you.
Well, Nvidia, like most chip makers, has struggled with geopolitical concerns, tariff policies, and global marketplace risks. Our next guest is a geopolitical strategist who works with businesses and governments to help mitigate risk. Riva Gujan is a director at Rhodium Group. It's a research and advisory firm focusing on global challenges and data analysis. Riva, it is great to see you as always. So let me get your take, Riva, on this NVIDIA report, and specifically, Riva, what do you make of what they're telling us about business in China?
Well, they are certainly lamenting declining business in China due to the H20 ban. As we know, Jensen referred to that as a deeply painful hit, affecting some 15 billion in potential sales of the China market. So obviously, they're not thrilled about that, but it was a long time coming, right? And Nvidia is also trying to use a lot of momentum in the moment from Trump's overhaul of the Biden era AI diffusion rule, which opens up third markets for Nvidia to deploy its GPUs while still closing off China. But they're trying to use that momentum to also push for a broader easing of chip controls on China directly. There are just a lot of reasons why I don't think that latter part is going to happen.
Well, and Riva, Nvidia continues to try to sort of get around these export controls. There's been reporting that it's developing another chip to ship into China, although it did say in a filing today that it might be unable to provide and create that product that would be a competitive one in China. Do you think it does succeed in sort of getting around the rules as it has been?
It's tough. I mean, there is a cat and mouse game between BIS regulators at Commerce on the one hand and Nvidia on the other. Of course, Nvidia is going to be the prime target under scrutiny for the design of any potential controls. And so, with this, the kind of variant of the Blackwell chip for the China market, from what we can tell, right, they have designed it to strip down the memory bandwidth by more than half compared to the original H20. They designed this without any advanced CoWoS, advanced packaging technology. So it's a stripped down chip, and it is going to come at a discount, but this is where you also have Huawei with a competitive edge, offering discounted chips that are also going to be at higher performance.
Riva, President Trump right now does seem to be a fan of Jensen Huang. You saw them in the Middle East together. That's a nice place for Jensen to be. I'm wondering how you think Jensen Huang maybe could try and capitalize on that relationship, capitalize on that friendship, Riva.
Well, it's a mixed bag, right? There are a number of tech influencers surrounding the president, and he's hearing from all of them. But there are also lines being drawn, and I think the message here for a company like Nvidia and others is focus on the ex-China market for your growth, right? Don't bank on that market for your future. That AI infrastructure build-outs have to happen all around the world. Jensen has taken this message globally of this idea of AI sovereignty, and he wants NVIDIA to be at the epicenter of those build-outs. From a policy perspective, the White House agrees and says, this is the time to lock in those AI infrastructure dependencies so that it's U.S. made and designed chips and U.S. hyperscalers that are leading these build-outs globally, but not in China. Right. And so that's the catch here. So whenever you're looking at any one of these tech influencers, there's always going to be some give and take on how far that influence actually goes.
And Riva, speaking of give and take, remind us where you stand in terms of whether these export controls are the right way to go, whether you're balancing effectively driving China to develop its own homegrown industry versus this sort of national security concerns on the U.S. side of shipping these chips in. Kind of where do you come out on that balance?
I mean, there are a lot of folks who will say that, look, it's better to keep Chinese companies dependent on U.S. technology. And so if a company like NVIDIA can offer a more superior chip, then let it sell into this market freely, and that the U.S. can then harness that strategic dependence for the longer term, as Chinese companies would prefer the better product. Now, the counter argument to that is that, look, when it comes to China's tech self-reliance goals, those are already working on steroids at this point, right? Where the directives from the state is to any company in China to say, don't rely on or don't bank your future on access to advanced U.S. technology. Assume that it won't be there and do everything you can to accelerate your production towards self-reliance. And you're seeing some really interesting things from Chinese memory chip makers like CXMT, which is not yet on the BIS entity list, but probably will be soon. But they are really driving toward just advanced memory, HBM, trying to gear toward AI development overall. And so this is really a test of China's industrial policy, of whether it's going to apply lessons learned from previous rounds where there was a lot of waste and corruption, and whether these external factors like U.S. chip controls are going to drive more focus smarter money flows this time around to yield real breakthroughs. But the US chip controls are a real barrier, and it appears that they're only going to tighten further.
Riva, always good to see you and have you on the show. Thanks so much for your time.
Thank you, Josh.